Hey, what's going on, everyone? It's Paul, the 920 trader with 920 Trading and Trading Decoded. Today is Thursday, January 11th, 2024. And yes, it is indeed CPI Day, the good old Consumer Price Index, where we have no earthly idea what's going to go on after the market opens. If we had any kind of a bias today, we had this nice run, pre-market run to about 478.50. We didn't even touch that today. Didn't even get anywhere close to that today. So let's start off, kind of see what happened. We had a fresh cross. We had a fresh cross in pre-market, but again, that's in pre-market, so I'm not worried or not necessarily even interested in what's going on there. We didn't have anything right at open. So guess what? No plays for me right at open. I'm waiting for that first fresh cross of the day. Now, that is part of my plan. I wait for the cross of the 920 either to the upside or to the downside. And as luck would have it, right here, took this trade right here at 944. So we had the cross and we breached VWAP to the downside. We typically use VWAP as support when we are above it and as resistance when we are below it. So when we breached that back to the downside, we got the cross on that same exact candle. So I jumped the cross by a couple of minutes. I jumped the confirmation candle by a minute or two. So anyway, took this trade right here at 944, bounced around, came down, was doing really, really well. I thought, you know what? I'm going to see if we've got a little bit more juice in the squeeze. Kind of bounced around for a few minutes, had a couple of candles that went over the 9, touched the 20, and then came right back down for an absolute banger of a trade back to the downside. It's always nice to catch that first trade out of the gate, and it was a very, very well executed trade. So jumped into the trade again right here. 944 closed that out when we rounded off the bottom. Could not breach this area down here. I was looking for 473.74 to breach that back to the downside. Closed it out in here because, again, we were not able to breach to the downside. Not making any more moves down there. I did not take the trade back to the upside. Now, next trade of the day, right in here. This was kind of a fun little trade that I was in. And I use that term loosely because this trade went against me. It went against me pretty good, actually. Was upside down, obviously, in the trade. Now, when I am in a trade, I do not watch my P&L. And I don't watch my P&L for the simple reason that my plan essentially says once you get into a trade, you let the market do what the market does, whether it is a winning trade or a losing trade. My stop on this particular trade was 475.20. 475.20. We got up to 475.20. We wicked to that level up there, 475.20. We did not close. That is the only thing that kept me in this trade. Now, here's my reasoning for jumping into this trade at this time. Because we breached the 20 back to the downside. That's the only thing that got me into this trade. We breached the 20, and I said, you know what? I'm going to jump the trade. I did jump the trade. Again, it went against me, so I held on to this trade for a long, long time, relatively long. For most people, it's a long time. For me, it's just another day at the office. So I jumped into this trade at 1034, wrote it down. Now, theta, I wasn't watching the value of my contract, but I knew theta would just be absolutely kicking me in the backside pretty good. And I looked at it after the fact, and it was. So my plan was to breach that 473, 75, or 74 back to the downside, see if we could breach to the downside, and then ride it down, see where it would take me. And it, in fact, did. We did breach that support back to the downside, wrote it down for a few minutes, and closed out that trade right here. So opened the trade at 1034. Closed it out at 1020. So the second green trade of the day, it was a good trade. But again, this trade went against me. If you are not used to holding on to your trades, and if you watch your P&L, you would have jumped out of this trade a heck of a lot longer than before I did. No question about it. But I believe in my plan. I believe in my process. And my process said, if it hits your stop, you're going to get out. And then back to the downside, follow it to the downside wherever it takes. Took me down there, so I got out of the trade. Now, bounced around for a little bit. We just kind of consolidated here for the next hour and a half, somewhere right around in here. Now, when we are counter trend trading, and we can counter trend trade, but I have specific rules in place for counter trend trades. We had a cross up here. I'm absolutely not going to take that cross. We had our second crossing here. I didn't take this one either. Our third cross was here. Didn't take this because, again, we're not breaching any levels, any specific levels that I was looking for to breach. I didn't take any of these crosses in here. As a matter of fact, we had this beautiful run up here back to the upside. I took none of these. Didn't take any of these trades. Now, kind of the same thing that happened yesterday. We bounced around. I missed a really, really nice trade early in the day, or kind of midday. So I thought, you know what? I'm going to take that next cross to the upside. So I jumped this trade right here. Jumped it by a couple of minutes. The 9 was sitting directly on top of the 20. So at 13.34, I took this trade again to the upside. Now, on my trades, on my screen, what you're going to see is you're going to see a smiley face. If it is above the price action, those are calls. If the smiley face is below price action, those are going to be puts. So we'll get that out of the way. So we kind of bounced around. I had VWAP as my support. That's what I was using as my support. We bounced around for, well, let's see here, 1334 up through 1352. So we're 18 minutes into the trade. That's not any kind of big deal. I wrote it out and closed it up in here because we were failing to get any higher. So 3 for 3 from a green standpoint. So it was a good day. That was the last trade that I took during the day. Now, if we move on through the day, there were some other opportunities during the day, no question about it. But, at that point, I was just dealing with members and talking members through trades, which is what we do at Trading Decoded. So from bell to bell, every single day, we're in live chat with our members, talking them through trades and so forth. But anyway, it kind of bounced around, had some nice moves later in the day. No question about that. Missed the rest of these trades. Just didn't take them. I was done for the day. It was a good day. So I was done for the day. Again, we ran up, made a nice little high. We were looking for levels to breach back to the downside to put on trades. It never did. It just kind of bounced around. We talk about that 350 candle. Talk about that 350 candle every day. Here it is right here. It was absolute nothing burger. Nothing came of it. We didn't breach anything back to the downside from a support standpoint. We didn't breach anything back to the upside from a resistance standpoint. So there was nothing for us to trade late in the day. Now, let's look at it from a 2-minute perspective. This is essentially where we started at on the day. Came in, made that, took those puts right in here, wrote it down, took the puts again. I had safety up here at this 475.20. That was my absolute positive stop out of this play. I will say this. The higher the time frame, the stronger the level. So remember that. The higher the time frame, the stronger the level. Here's our 3-minute look. So we ride this 9 all the way down. We had one of our members ask today, they asked me, can you trade higher time frames exclusively? And I said, well, of course you can trade higher time frames. Not a problem. I execute on the 1-minute time frames, and then I look at the higher time frames for trend confirmation. A couple of days ago, we had that beautiful, beautiful trending day. Actually, Monday, we had a beautiful trending day. Tuesday was a great day. Yesterday just kind of bounced around until it no longer didn't. And today's CPI day, but again, it was a really, really nice day in the markets. So there's your 3-minute looks. Notice that 9 is above the 20 all afternoon. Now here's your 5-minute look. This clears it up. So when you're looking at it from a 5-minute standpoint, once we got above the 9, once the 9 got above the 20 on the 5-minute, it ran up the rest of the day. Now, the only problem with using the 5 throughout the day, at least late in the day, is theta can affect you. So theta, the time decay of money. The time decay will absolutely get you. It is known as theta crush. You don't want to get caught into a situation where you're holding through too much late in the days if you are trading 0 DTEs. So again, there's your 5-minute look. Very, very well defined. Very, very well defined. Nice little cup, nice little handle off to the right. And again, you can see this on all your time frames. So there's your 3-minute. Here's your 2. There we go. There's your 2. And there is your 1-minute chart, the entire day on a 1-minute chart. If we want to look at a higher time frame, There's your 15 minutes. So very, very, again, very, very well-defined, very, very well-defined areas of support and resistance throughout the day. But again, as a 9/20 trader, I am relying on the 9 as my support on the way up. So this is my support. This is my support. Obviously, I'm always looking left to know where I could spot potential or to see potential issues along the way as I'm riding it. So the 9 is the support on the way up. The 9 is the resistance on the way down. Hence the riding the 9. That's what we do as 9/20 traders. So our 9 is our support. Our last line of defense is our 20. That's why we use both. We use both the 9 and the 20. So anyway, there is the rundown for the day. As a group, our members did extremely well today. It was a very good day. So, hey, thanks for stopping in. Thanks for checking everything out today. We hope you enjoyed. Now, if you enjoy our videos, please like, share, comment, and subscribe to our videos. We would like that. We'd appreciate that very much. At any rate, have a great rest of the day, and we will see you in the markets.